We got a look at the health of the housing market this morning, and it is pretty incredible. We saw a huge rebound in home buying in the month of June. Existing home sales jumped by a record 20.7% from its May levels. Let's bring in Cortland's chief economist, Brad Dillman. Brad, a pretty incredible snapback we saw. What is fueling this? Is it historically low mortgage rates? Is it more families moving out of cities to go to the suburbs during this pandemic? Is it a little bit of everything?
I'd say it's definitely a little bit of everything. We certainly have a pent-up demand effect from when existing home sales had been down earlier in the year as a result of the pandemic. Obviously, these low mortgage rates are helping as well. As far as people moving, we do have the aging millennial generation. There's been a trend that's been underway for several years now of people migrating not only to more affordable secondary and tertiary markets, but also the suburbs within them. But I do think something that is interesting is a recent Pew survey showed that only about 3% of adults have moved as a result of the COVID-19 pandemic. And then within that, it was about 61% of people who had moved as a result of the pandemic. About 61% had actually just moved in with family. So the number of people who are moving as a result of the pandemic, maybe not so much, but I think we're still looking at the continuation of this pre-existing trend of people moving to affordability, people moving to the suburbs, and the aging millennial generation.
Brad, I wonder how much of this is also wealthier folks going out and buying second homes to sort of escape the city life. And you're seeing sales in places, I'm just thinking locally for us in New York City, places like the Catskills, nearby New Jersey and Pennsylvania, people really buying up big properties there. How much of that do you think is fueling the overall existing home sales number we're seeing?
So according to the NAR report, the National Association of Realtors report, we haven't seen a lot of movement in all cash purchases. Definitely they're still there. There's been a little bit of movement back and forth, but the investor activity doesn't seem to be driving the market the way it had been coming out of the Great Recession. So certainly it's happening, but I don't think that's the real takeaway here. In fact, we actually saw an uptick in the presence of first-time home buyers in this report, which again, it had ticked down a little bit, but now it's coming back up. So it looks like we're looking at something that is a healthy market overall.
Brad, do you think we are sitting on the precipice of a foreclosure wave going into the fall? And the trigger point being, we're getting the impression lawmakers either won't extend the unemployment top up, or it will be half or maybe 75% less, potentially putting a lot of households in much more dire financial straits.
That's true, but we also still have the mortgage protection that's in place for about a year so that people can have, if they are in a situation where they can't pay as a result of COVID, that they are protected for about a year. That is still certainly a good point. What I'm hearing out there is that there's something will get done in August, and there probably will be a continuation of the expanded unemployment benefits, albeit a little bit lower. But I think a lot of the people that are in the position to be benefiting from that right now, if we look at the job sectors that were hit by the pandemic, it's leisure and hospitality. It's a lot of sectors where you don't have salaried people who really are in the housing market in the first place. I would wager that a lot of the activity we are seeing here is people who are salaried, whose jobs haven't been affected by COVID, and for people who don't think that they will be affected in the near term as a result of how the labor market may still pan out over the remainder of the year. And again, when we look at this report, it does kind of mimic a lot of other metrics that we've seen elsewhere in the economy of this initial sharp rebound. Where it goes from here, certainly open to question, but it's definitely a positive sign.
Brad, what about inventory, and how much is that playing a part in selling prices right now? Because the U.S. was facing a housing shortage even going into COVID-19. I believe we were about 1 million units short of what we really needed to start the year. Has the inventory picture looked any better? And are we seeing lots of price wars bubbling up because there are just fewer homes that more people are going after?
Yeah, so the NAR says it's definitely heavy buyer competition coupled with limited inventory. Now, inventory did tick up a little bit, but it's still down substantially. The months of supply on market, according to these preliminary figures, did go down too. So you definitely have an inventory situation, but when we think about supply, we can think about it two ways. There's not only a decline in listed inventory for sale, but we also have estimates of the amount of housing in the country in general compared to the population. So those figures are still down. That's, we physically, according to some estimates, we do not have 1 million units that we actually need. And then within that, we now have a falling amount of inventory that's actually listed on the market. Although in this recent report, it did tick up slightly. But that's definitely constricting the market. That's contributing to heavy buyer competition and some upward pressure on pricing.
Brad, what's the outlook for rents? If people aren't going to be kicked out of their home, which is obviously good, what's the longer term outlook for rents as their salaries might be under pressure?
Well, right now, if you look at some of the preliminary figures for Q2 from sources like RealPage, they do show a year-over-year decline in effective asking rents. Most forecasts do show a continuation of a contraction over the remainder of the year, and then a substantial breakout in the second half of next year. So we would expect rents to be relatively soft in the near term as landlords focus more on renewals and retaining residents that they do have, rather than pushing rents in such a way that they may be sacrificing occupancies, which I think is what most people are focusing on right now. We have to remember going into this too, we did have a 20-year high in multifamily occupancy rates going into the COVID-19 pandemic. There's a lot of multi-family supply in the hopper that's expected to deliver over the remainder of the year and into next year, but it doesn't look like it's really enough from an occupancy perspective. And I do think in the meantime, we'll see rents not fall as far as they otherwise might in a more supplied market. And then we'll see them bounce back relatively quickly next year. Again, this all depends on how labor markets pan out. And I think right now, all eyes are really on the election and what that may mean for 2021 and beyond.
Yeah, for sure. Employment has a lot to do with the health of the housing market. Brad Dillman, Chief Economist at Cortland, thanks for being with us.
Thank you.